In this video, we're going to break down a complete mechanical trading system that combines three highly effective technical indicators: the 25-period exponential moving average, the relative strength index, and the money flow index, to create a disciplined, rules-based approach to trading. This is Tim, veteran heavy infantry soldier for the Texan Army. I have seen many applications of the money flow indicator in my years of the Wallstreetwars. The incorporation of this indicator by the commander has helped create our greatest ally in battle, the Momentum Coil. This isn't about guessing market direction or chasing news. It's about building a repeatable framework that uses price, momentum, and volume together to identify high-probability setups. The core philosophy behind this system is simple: trade in the direction of the trend, confirm momentum, and validate that real money, not just speculative noise, is flowing in the same direction. The 25-period EMA acts as the trend filter, showing us whether the market is in a short-term uptrend or downtrend. The RSI captures the strength of momentum by identifying when the market shifts from bearish to bullish energy, and the money flow index adds a volume-based confirmation layer, ensuring that buying or selling pressure actually supports what price is doing. By combining these three, we aim to eliminate emotional trading and reduce false signals that often occur when relying on a single indicator. In other words, the EMA tells us which way to trade, the RSI tells us when momentum is shifting, and the MFI tells us whether real capital is backing that move. Entry, exit, and trade logic. Now, let's break down exactly how this system works step by step. For a long trade, we want to see the price closing above the 25 EMA. That's our signal that the short-term trend is bullish. Next, we look for the RSI to cross above 50, showing that momentum is swinging upward, and the money flow index should also cross above 50, confirming that volume and capital are following the same direction. When all three conditions align, that's our green light to enter a long position on the next candle. Conversely, for a short trade, the logic flips. Price must close below the 25 EMA, the RSI crosses below 50, and the MFI also dips under 50, signaling bearish energy. Optionally, for exits, this system keeps things mechanical. We set a stop loss just beyond the most recent swing point, below the last swing low for longs, or above the swing high for shorts, and a take-profit target at about 1.5 to 2 times that risk distance. Alternatively, you can exit when an opposite signal appears, like when price closes on the other side of the EMA with both RSI and MFI confirming the reversal. This risk management keeps trades consistent, limits losses, and avoids emotional decision-making. The rules are objective, so you could easily code them into an automated bot or backtesting engine without needing any subjective judgment calls. Performance and evaluation. So how does this system actually perform in practice? When backtested on major markets, such as the S&P 500, Euro to US dollar, or Bitcoin using a daily time frame, this EMA, RSI, MFI combination tends to deliver an average win rate between 52 and 60%, depending on the asset and volatility regime. That might not sound spectacular at first, but remember, the goal of a mechanical system isn't to be right all the time. It's to be profitable over time with proper risk management. With a reward-to-risk ratio of about 1.5 to 2 to 1, even a 55% win rate can yield steady, compounding growth. The big strengths of this method are its clarity and discipline. The EMA keeps you aligned with the trend. The RSI ensures you have momentum on your side, and the money flow index filters out weak, low-volume setups. It's straightforward enough for beginners, but structured enough to be used by algorithmic traders. And because the rules are purely mechanical, you can backtest on years of data to evaluate performance before risking a single dollar. Pros, cons, and final thoughts. Now, like any system, this one isn't perfect. It has strengths and weaknesses you need to understand. On the positive side, it's systematic and unemotional, meaning there's no guesswork or subjective interpretation. The trend filter keeps you trading in the right direction. The volume confirmation helps prevent false RSI breakouts, and it's flexible enough to work on multiple time frames, whether you're swing trading on the daily chart or scalping on the 15-minute chart. It's also easy to automate, backtest, and optimize, making it an excellent foundation for anyone learning algorithmic trading. However, the system does lag a bit because moving averages react to price, not predicted, so you'll often enter after a move has already started. In choppy, sideways markets, you may get whipsawed as the price oscillates around the EMA, triggering several small losses before a clear trend emerges. To reduce that, you can add filters such as an average true range threshold to only trade when volatility is above a certain level, or include a higher time frame EMA like the 100 period to make sure you're trading in sync with the broader trend. You can also experiment with a dynamic trailing stop instead of fixed take profit target to capture larger trend moves when they appear. The key takeaway here is that this system is a framework, not a magic formula. It gives you a disciplined, evidence-based structure to build on, but your success will depend on consistent execution, patience, and emotional control. Backtest it, tweak the parameters for the asset you trade, and make sure your risk management fits your personal tolerance. When used properly, the 25 EMA, RSI, and money flow index together form a powerful trio that balances trend, momentum, and volume in a clean, mechanical way. And that's exactly what you want in a sustainable trading strategy. The incorporation of the principles of this system have helped propel the commander's trading systems like those used in the Momentum Coil and have helped Chamel Raghu earn the nickname, the Conqueror of Wall Street. This is Wall Street Wars.